Let's talk about the question that's on everybody's mind right now. Will Ripon home prices crash in 2025? If you're actively looking for a home or even just casually scrolling through listings online, you've probably had that thought. And if you're someone who's been sitting on the sideline waiting for the right time to buy, it's probably the biggest thing holding you back. You're not alone. I hear it from clients almost every single day. Should I wait? Are prices going to drop soon? Is the crash coming? What if I buy now and values fall later? These are completely normal questions, especially with everything going on in the economy right now. Rising interest rates, inflation, and all the scary headlines in the news. And of course, a lot of people still remember the crash in 2008. That was a time when home prices dropped fast. A lot of people lost equity, and some buyers felt like they got stuck in homes that were worth less than what they paid. So it makes sense that people are cautious. Nobody wants to make a bad investment. Nobody wants to feel like they could have waited and saved tens of thousands of dollars. But here's the thing, just because 2008 happened once doesn't mean we're headed in that direction again. The housing market today is very different than it was back then, and Ripon is in a completely different position compared to some of the bigger metro areas that saw massive declines. So in this video, we're going to break it all down. We'll look at what's really going on with Ripon's housing values right now, what the experts and local trends are showing for 2025, whether waiting will actually help or hurt your buying power. And by the end, you'll have a much clearer idea of what's best for you based on facts, not fear. Now, let's talk about the word that scares a lot of people: crash. It's understandable when people think about buying a home and hear the word crash. They immediately picture 2008. That was one of the most painful real estate collapses in American history. Home values dropped by 20 to 40% in some places, and millions of people lost their homes or ended up owing more than their property was worth. So of course, it makes sense that people want to avoid making the same mistake twice. But here's the truth. The conditions we're seeing today in Ripon and across much of the country look nothing like what we saw in 2008. And if you understand the differences, you'll understand why a full-on crash is very unlikely in 2025. Let's go back and look at what caused the crash in 2008. It wasn't just high prices. It was a perfect storm of bad lending practices, too much inventory, and a ton of risky subprime loans. Back then, a lot of buyers were getting mortgages they couldn't actually afford. Lenders were approving loans without verifying income or employment, and people were buying homes with little or no money down. Many of those loans had adjustable rates, which started off low but then shot up after a couple of years, leaving homeowners with massive payments they couldn't handle. Once foreclosures started rolling in, prices crashed fast, and it created a ripple effect that hurt almost everyone. Now, compare that to where we are today. Lending standards are much stricter. Buyers now have to prove their income, assets, and credit before they're approved for a mortgage. Most loans today are fixed rates, meaning the monthly payment stays the same for the life of the loan. That gives homeowners a lot more stability. And unlike back then, most homeowners today have equity. They're not upside down on their mortgage. In fact, many of them are sitting on hundreds of thousands of dollars in home value, which gives them the opportunity if life changes. They can sell, refinance, or use that equity to their advantage. That's a huge difference from 2008 when people were just stuck. Let's also talk about inventory in 2008. There were too many homes on the market. Builders were overbuilding, and there was way more supply than demand. But in Ripon today, and really across the Central Valley, the opposite is true. We don't have enough homes for the number of people who want to buy. Builders slowed way down after the crash, and they haven't caught up. Combine that with sellers who are holding on to their low interest mortgage rates and not listing their homes, and you've got a serious inventory shortage. Fewer homes for sale means prices are more likely to hold steady even with higher interest rates. And speaking of demand, Ripon is still in high demand. Bay Area buyers, local families, retirees, and remote workers are all looking for a place that offers safety, community, and good schools. Ripon checks all those boxes. That demand puts a natural floor under home prices. So even if rates stay high or the inventory slows down a little, there's still a long line of buyers ready to act when the time is right. So when people ask, is Ripon going to crash like 2008? I can confidently say no. Could prices dip a little? Maybe. Could homes take a bit longer to sell? Possibly. But a major crash where values drop 20 to 30%? Not very likely. The fundamentals are simply too different. So now let's get into the big decision. Should you wait or should you buy now? This is where so many home buyers get stuck. They're watching the headlines, trying to predict interest rates, waiting for prices to fall, and hoping for the perfect moment to jump in the market. Listen, I get it. Nobody wants to feel like they bought too soon. Nobody wants to hear 6 months later that prices dropped or rates dipped. But here's the honest truth. Waiting doesn't always save you money. In fact, sometimes waiting can cost you more. Let me explain. Most people think that if they wait, home prices will fall and interest rates will drop. But the real estate market doesn't always work that cleanly. Sometimes prices fall slightly, but interest rates go up, which cancels out your savings and actually increases your monthly payment. Other times rates fall just a bit and suddenly demand surges, more buyers enter the market and prices go back up. Either way, your monthly payment ends up the same or higher. And here's the part most people miss. You can't control the market, but you can control your timing. The real question isn't just what's happening out there, it's what's happening in your life. Are you tired of paying rent and building someone else's equity? Do you need more space for your family? Are you working remotely and want to live somewhere that actually fits your lifestyle? Are you planning to stay in the area for the next 5 years? Because if the answer to questions like that is yes, then trying to time the market might be costing you time, opportunity, and long-term financial growth. Let's talk about equity for a minute. Every month you pay your mortgage, a portion of that payment goes towards building ownership in your home. That's called equity. The earlier you start building it, the more you can benefit from appreciation over time. So while you're waiting on the sidelines, buyers who made a move last year are already ahead. They're gaining equity, they're paying themselves instead of their landlord, and if rates drop, they can refinance. That's something you don't get as a renter. Renting means 100% of your payment is gone every month. Owning means you're investing in something long-term and gaining leverage for your next move. I also want to talk about peace of mind. If you're constantly watching rates or worrying about what the market is going to do, that creates stress, and that stress can keep you from making decisions that could actually improve your life. Sometimes the right time to buy isn't about finding the lowest rate. It's about locking in your future, creating stability for your family, and choosing the community where you feel safe, supported, and at home. Now, that doesn't mean you should rush. Buying a home is a big deal. You need to know your numbers, you need to have a plan, and you need someone to walk you through your opportunities so you don't overextend yourself. But if you're financially ready, emotionally ready, and looking for the right time, I'll be honest with you, the best time to buy is when the right house in the right location at a payment you can afford becomes available. Not when the media tells you it's time, not when your cousin says he thinks prices will drop, and not when you finally win the rate lottery. Because by then, the house you wanted may be gone, and the payment might be even higher. So, should you wait? Maybe, but don't wait blindly. Let's talk, let's run your numbers, let's see what you can afford today, what your monthly payment will look like, and how that compares to waiting another 6 to 12 months. I'll help you explore first-time buyer options, low-down payment programs, and creative ways to make your offer more competitive if inventory is tight. Bottom line, buy when it makes sense for you, not when the market is perfect, because there's no such thing as perfect timing, but there is such thing as smart strategy, and that's what I'm here to help you build. So here's the bottom line. The Ripon market isn't crashing, prices may shift slightly, and interest rates may move up or down, but a major crash like 2008 just isn't what we're seeing based on the data. If you're serious about buying a home in Ripon in 2025, the smartest thing you can do, stop waiting for perfect and start getting prepared. That means knowing your numbers, understanding your financial options, and working with a mortgage expert who actually listens to your goals, not someone who's just trying to sell you a rate. If this video helped you feel more confident about what's happening in the market, go ahead and give it a like. It helps other buyers just like you find this information. And if you haven't already, make sure to subscribe. I post weekly videos breaking down local market trends, first-time buyer tips, and insider advice you won't get from big banks or random online lenders. And listen, if you've been thinking about buying, but you're still unsure about the timing, let's talk. I'll walk you through what you can realistically afford, what loan programs make the most sense for your situation, and what a home in Ripon would actually cost you per month, including property taxes, insurance, and everything in between. I'll even help you compare what it would look like to buy now versus waiting 6 or 12 months, so you can make the decision that feels right for you and your family. You can call, text, or click the link in the description to schedule a free strategy session. No pressure, no sales pitch, just real advice. And if you're still watching and you've got questions I didn't cover in this video, reach out. I'd love to hear from you. Thanks so much for watching, and I'll see you in the next video.